Amid surging inflation, inventory swamped retailers pushing big discounts. So it's just like the things that we need are unavailable, and a lot of the things that we don't need that people use discretionary money on are available. There is a glut of goods. It's a good time for you to be able to pick up that. I got a list, TVs, and let me just read the article. Consumers are being hammered by price inflation at gas stations and grocery stores. They may be surprised by what they find in electronics, clothing, furniture, and appliance stores, swamped by excess inventory. The supply chain got whacked. It got out, and it takes a while to pull it back tight. Well, now it's tight, and it's time to go, and people are out of discretionary income. Many major retailers are offering big-time discounts on a variety of consumer goods. Target has twice cut its profitability outlook in recent weeks. In its June 7 warning, Target predicts its second quarter operation margin would be roughly 2%, well less than half the 5.3% the company projected in May. They're starting to feel it. Target carries a bunch of discretionary goods, usually on the end cap. You know what I'm saying? That stuff that they get you when you're walking and you're going to get a jug of milk, and it's like, oh man, I need that. People aren't buying that anymore. Now, retail's sales urgency translate into a better deals on items like furniture, home decor, clothes, televisions, computers, and kitchen appliances. I've already read that. It was up in the front. But again, if you need those things, go ahead and get them. Now, as all this is happening, I'm going to be talking about investment opportunities consistently. I want you guys to profit from this. When people are out of discretionary spending, they're out of their play money, and you've been waiting, you've been sitting back. Check this out. You know how I feel about gold and silver miners and copper and zinc and uranium and all that stuff. I know we're entering a bull market, and I know when I see a deal. And the one that's on the board is one I'm going to talk about, Starr Peak Mining. They're down 75%. 81 cents a share. That's how we like to find them. And if you'll go back to the other one, just so you know, I have bought all the mining companies that I've talked about. I'm just putting that out there. I'm telling you the truth. I never want to steer you wrong. I don't want to tell you I bought this one because I haven't. But I'm going to try to buy it today. And it's important that you know. So don't give me any hate in the comments. I'm telling you the truth. I've been involved in miners forever, and I think it's important to bring this up. Look, this is leveraging. If you buy this for $22 and it goes to $50, you did good. If you buy a mining stock that creates this, you do really, really good. Like, for instance, the last company that was involved in this sector, a B2B greenstone belt over in Canada. They got a bunch of volcanoes over there, and it creates these deposits. The last company, look at this chart. It went up 931% over the last 5 years, and it has been up as much as 63 times your money. That's the kind of asymmetric gains that I want to see everybody on here get. I'm involved in over 50 of these things. So I'm putting my money where my mouth is, and I'm never going to try to tell you a lie. Now, I went over this with Lior yesterday, and he showed me some of the things that, that really stand out to him. Even though it has made a big discovery, its shares were down 75% over the last year. That's what's the most interesting about it. And without anything fundamentally being wrong, and that's the question, what's wrong with it? Why is it down 75%? Well, it's important to notice that 40% of the shares are held by insiders, management. It's also important to know they ain't sold one. Not one of them have been sold. It's the people that are needing money for food and, the people that sell things at the bottom. The normal, average normies that sell at the bottom. That's not the best time to sell. But undoubtedly, that's when people sell. And that's when we're going to be investing. Now, just try to keep that in mind. I know a lot of my subscribers are, why would you do that for fiat currency? Well, you can take that fiat currency and buy more of this. We're still denominating everything in fiat currency. So try to hang with me on the leverage idea, because that is exactly what I'm trying to do with my gold miners, copper miners, zinc miners, uranium, and this seems to be one of them. The founder of the company, one of the founders of the company, helped set up the other gold mine that's 500 meters away. They made him a special advisor. See, you can look at a company and see the team that's done it over and over and over again, and odds are they're going to get it right again because they've been there and done that, and it's like 554 yards away, whatever 500 meters is. It's right there. So keep that in mind. That's a really good highlight. And the same drilling contractor that hit the big find over there 500 meters away is the same one at Starr Peak Mining. It's another good plus. The gold miner 500 meters away has drilled 400,000 meters down. Starr Peak Mining's only gone 90,000. So they're only a quarter of the way that the other company's done. So, you know, we're just getting started. That's the asymmetric bet of these things. That is the whole, you know, I wouldn't really have it any other way. If it was Amazon or Google, well, there wasn't, you know, it could be a little overvalued or undervalued, and it's got a really, you know, people are trading it constantly all the time. When these things go out of value, they go way out of value. And when they go way up, they go way up. Just try to understand that about these miners. And it's really strange that they're down so much at 81 cents a share. If somebody like Barrick Gold or Newmont came to buy them at their current price, they'd say no. They wouldn't sell it. It was just too off. It's discounted too much. That would be silly. Now, these people, the share, it was $3 a share. June, I think it was. Chart. That's today's chart. So why would they do that? You know, just because the sentiment for gold falls down a little bit because people don't understand it does not mean it's not ever going to go up again. If you think gold's never going to go up again, then don't worry about any of this. But if you know better and you know what real money is, then try to, and you know we're going to need silver, and you know we're going to need copper, then try to, you know, see it. That's about it, guys. It was really interesting that 40% of the stocks were held by insiders. That's really cool because look at like something like Peloton stock. The Peloton insiders are dumping that stock like dirty mop water. I mean, the stock chart looks like my social credit score. So, but we're not talking about Pelotons. We're talking about real money that I have people buying silver and gold every day, not to mention the copper and zinc these people are mining that goes in real cars. There's real demand for these things. We're entering a commodity bull cycle, and I really do believe these mining stocks are going to go nuts. And Starr Peak Mining is 75% off. So take a look at it. I hope you like these videos. Like and subscribe if you like them. And have an awesome, awesome day. Later.